What if XRP, one of the most debated cryptocurrencies in the market, suddenly matched the market capitalization of silver, one of the world's most valuable precious metals? That single question has ignited intense discussions across both the crypto and traditional finance communities. So, we are going to explore how silver surged to a $4.48 trillion valuation, why XRP is being called digital silver, and exactly how high XRP's price could go if it reached the same market cap. Despite these bullish narratives, XRP's price action tells a different story. XRP began 2025 trading at $2.07 but has since declined by 11.19%, falling to around $1.84. This underperformance happened during a broader crypto market downturn that cooled investor enthusiasm across many altcoins. From a market impact standpoint, this price stagnation has caused many investors to lose patience, while others see it as a classic accumulation phase. Historically, assets that lag during bullish cycles often become the biggest surprise movers later on, once sentiment flips. Crypto analyst Steph pointed out that both gold and silver followed a similar price structure before their rallies. This structure included a long grinding phase, followed by a final flush week, and then a quiet base before exploding upward. According to his analysis, XRP appears to be following the same technical blueprint. If this battle if this pattern plays out, the market impact could be massive. Structural similarities across different asset classes often attract technical traders, algorithmic funds, and institutional capital, all of which amplify momentum once a breakout occurs. So, what would XRP be worth if it matched silver's market cap? This is where the numbers become truly eye-opening. At its current price of $1.84, XRP's market capitalization stands at approximately $111.99 billion, based on circulating supply of 60.57 billion tokens. To match silver's $4.485 trillion market cap, XRP would need to grow nearly 40 times larger than it is today. If that happened, the price of XRP would rise to approximately $74 per token, representing a staggering 3,921% increase from current levels. From a market impact perspective, such a move would reshape the entire crypto ecosystem, pulling in massive liquidity and mainstream attention. In my own personal opinion, comparing XRP to silver is bold but not unrealistic. Silver's 2025 rally proved that ignored assets can outperform everything else when the narrative changes. XRP's current underperformance may actually be its greatest advantage, as markets often reward patience more than hype. However, it is important to stay grounded. A move to $74 XRP would require widespread adoption, regulatory clarity, and sustained institutional demand. While the potential is undeniable, investors should approach XRP with a long-term mindset, understanding both upside and the risk. Before we dive into numbers, predictions, and market forecasts, let's set the stage. XRP has always been one of the most debated cryptocurrencies in the market, praised for its speed and utility, but also criticized for its centralized structure and ongoing competition. While some analysts paint extremely bullish futures for XRP, others take a more cautious and even pessimistic stance. So, we're not talking about best case moon scenarios here. Instead, we're asking a much more realistic and important question. What happens to XRP if things don't go as planned? Even in a worst case scenario, how high could XRP realistically climb by the year 2035, and what would that mean for us being investors? So, do bullish predictions always come true? Earlier in 2025, several analysts made headlines with bold XRP predictions. When XRP was trading around $3.15, market commentator Mario Naval projected a move to $10 by December 2025, assuming Bitcoin reached $225,000. Around the same time, analyst Carl Moon took an even more aggressive stance, suggesting a 10 times move to $30. Fast forward to December, and reality painted a different picture. XRP failed to meet these targets, reinforcing a critical lesson in crypto investing. Bullish projections are speculative, not promises. Market cycles, liquidity conditions, and macroeconomic pressures can derail even the most confident forecast. This has a direct market impact. When over-optimistic predictions fail, investor trust weakens, leading to reduced buying pressure and more conservative outlooks moving forward. So, what does a worst-case scenario for XRP by 2035 look like? To explore XRP's long-term downside potential, analysts turn to Google Gemini asking what XRP might look like in a worst-case scenario by 2035. Surprisingly, even the pessimistic outlook wasn't entirely bleak. Gemini suggests that XRP could reach around $8 by 2035, even under unfavorable conditions. While this represents only about 4 times increase from its current price, it's still meaningful growth over a decade. From a market impact standpoint, this implies that XRP has a strong price floor supported by utility and adoption, even if it never becomes a dominant global asset. So, how do other analysts compare XRP's worst-case outlook? Not everyone agrees with Gemini's assessment. Analysts at Bidget offered a more conservative outlook, estimating XRP's lowest potential price by 2035 at $3.80, with a maximum of $5.55. Interestingly, even their most optimistic estimate falls below Gemini's $8 scenario. On the opposite end, Telegon analysts projected a far stronger outcome. They believe XRP could reach a maximum of $40.29 by 2035, with a minimum of $35.47 even under bearish pressure. This highlights how dramatically opinions can differ depending on assumptions about adoption, regulation, and global finance. In my own opinion, XRP's futures lies somewhere between extreme pessimism and unrealistic hype. The $8 worst-case scenario by 2035 seems reasonable if XRP maintains relevance but fails to achieve global dominance. At the same time, ultra-bullish targets above $30 require massive institutional adoption and fundamental shift in global finance. XRP doesn't need to become a global monetary asset to succeed. Even moderate utility-driven growth could still reward long-term holders. However, investors should approach XRP with realistic expectations, understanding that steady progress often beats explosive promises. Russia's largest bank, Sberbank, has officially launched its first Bitcoin-backed loan, marking a major shift in how digital assets are being treated inside one of the world's most tightly regulated financial systems. This isn't just another crypto headline. This move signals institutional confidence, regulatory experimentation, and a possible new era where Bitcoin becomes usable collateral, just like real estate or gold. So, why is Russia's largest bank entering Bitcoin lending? Sberbank, Russia's largest financial institution, has officially entered the crypto space by issuing its first ever loan backed by cryptocurrency. This was not a public retail launch, but a controlled pilot project designed to test how crypto can function inside traditional banking systems. The move highlights one major reality. Bitcoin is no longer being treated as a fringe asset. Instead, it is being tested as a legitimate collateral. What makes this moment important is that Sberbank is not a small experimental institution. It dominates Russia's financial sector. When a bank of this scale moves, markets pay attention. This signals a shift from skepticism to structured experimentation, where digital assets are no longer ignored but evaluated through real financial use cases. So, how does this fit into Russia's regulatory strategy? According to Sberbank Deputy Chairman Anatoly Popov, Russia's digital asset regulations are still in their early stages. This pilot loan serves as a real-world test environment for future policy decisions. By working closely with the Central Bank of Russia, Sberbank aims to help shape rules that balance innovation with control. This approach allows regulators to observe how digital custody performs, how risk can be managed, how crypto-backed finance behaves in real conditions. Rather than banning or rushing adoption, Russia is choosing measured experimentation. So, how big is Intellion Data really? Intellion Data isn't a small player. In 2024 alone, the company reportedly generated $79 million in revenue. Its operations consume nearly 300 megawatts of electricity, highlighting the industrial scale of modern crypto mining. Even more impressive, the company is building a mining facility near the Kalinin nuclear power plant, a gas-powered energy station, and turnkey mining solutions for industries with excess electricity. This positions Intellion as both a crypto miner and energy infrastructure player. So, is Russia opening crypto to retail investors? While institutions are testing deeper crypto involvement, retail access remains limited. The Central Bank of Russia has signaled it may allow individuals to trade digital assets, but only within a cap of approximately $3,800 per year. This reflects a cautious approach, allowing participation without risking systemic instability. In my own personal opinion, this development marks a turning point. Russia isn't rushing into crypto, it's strategically testing it. Sberbank's Bitcoin-backed loan proves that digital assets are becoming financially credible, even inside conservative systems. While regulation remains tight, the foundation is being built quietly and methodically. In my opinion, this move signals that crypto is no longer asking for permission. It's proving its value. Once institutions trust the structure, broader adoption becomes inevitable. The question is no longer if banks will adopt crypto, it's how fast they are willing to move. The crypto world is once again buzzing, and this time it's not because of price charts, lawsuits, or regulation updates. Instead, the spotlight is on a single number, 589 or 589. What makes this even more interesting is that this number unexpectedly appeared during a mainstream New Year's Eve broadcast in Times Square, instantly grabbing the attention of the XRP community worldwide. What started as a simple behind-the-scenes detail has now turned into a viral moment, pulling in reactions from major industry figures, including a former US regulator. From XRP supporters, this moment feels symbolic, almost like a quiet signal hidden in plain sight. So, we are going to break down what happened, why 589 still matters, how influential figures reacted, and what this could mean for XRP moving forward. So, let's dive in. So, what happened at Times Square that caught the XRP's community's attention? During a CBS Bay Area broadcast, viewers were shown behind-the-scenes footage of how the massive 2026 New Year's display was constructed in Times Square. Officials revealed something that seemed trivial at first. The entire display uses exactly 589 LED bulbs or LED bulbs. To the average viewer, this was just a fun technical details, but to the XRP community, it immediately stood out. The number 589 has deep roots in XRP culture, making this moment feel anything but random. From market psychology, from a market psychologist standpoint, moments like these often act as emotional triggers. They don't move price directly, but they fuel engagement, belief, and narrative momentum, which are powerful forces in crypto markets. So, why did the XRP community react so strongly to the number 589? Shortly after the broadcast, a popular XRP focus account, not financial advice, that crypto, highlighted the moment. The emphasis wasn't just on the number itself, it was on how clearly and intentionally it was presented. Then came another boost. MoonPay, a major crypto payment processor, shared the clip and jokingly stated that it was the most XRP coded New Year's Eve of all time. That comment pushed the moment into viral territory. From a market perspective, this shows how community-driven narratives can amplify relevance. When influential accounts engage with symbolic events, it strengthens collective belief, a powerful psychological factor in long-term crypto holding behavior. So, why did the former US regulator's reaction matter so much? Things escalated when Caroline Pham, Chief Legal Officer of MoonPay and former acting chairman of the U.S. Commodity Futures Trading Commission or CFTC, reacted to the video using rocket emojis. He didn't say a word, and that's exactly why it mattered. In a crypto culture, silence paired with symbols often carries meaning. Her reaction instantly sparked speculation across the XRP community. Some viewed it as a painful nod, while some viewed it as a playful nod, while others interpreted it as a subtle acknowledgement of XRP's long-term potential. From a market standpoint, the former regulators engage, even casually, it reduces perceived institutional resistance. That alone can shift sentiment even without policy changes. So, why is the number 589 so important to XRP holders? The number 589 has been part of XRP culture for nearly a decade. It originated from early community artwork, crypto messages, and symbolic interpretations related to XRP's long-term valuation potential. Over time, it evolved into a cultural marker, representing optimism, patience, and belief in XRP's global financial role. More recently, the number resurfaced when Solana's official account posted 589, triggering massive engagement. Even more interesting, Ripple CEO Brad Garlinghouse has historically maintained his X following count at 589, adding to the mystique. Some analysts also points out that ISO 4217 or 4217, currency code 589, is currently unassigned, fueling speculation that XRP could someday align with global financial standards in unexpected ways. Whether coincidence or design, 589 continues to appear at moments that reignite belief. For weeks, the crypto community has been buzzing about one powerful idea, the XRP supply shock theory. Many believe that as XRP disappears from exchanges, prices will explode upward. But now, a top XRPL validator is pushing back hard against that narrative. According to new data and expert analysis, exchanges still hold nearly 16 billion XRP, and that changes everything. This information challenges the belief that XRP is becoming scarce and questions whether a supply shock is even possible in the near future. So, we are going to break down what the data really shows, why some experts disagree, and how this could impact XRP's future price movement. So, how much XRP do exchanges actually hold? According to VET, exchanges currently hold close to 16 billion XRP. That amount alone challenges the idea that liquidity is drying up. He explains that even if users store their XRP in private wallets, transferring it back to exchanges takes only 3 to 4 seconds. This speed makes it nearly impossible for supply to stay tight for long periods. In other words, XRP is still highly liquid. From a market standpoint, this means sudden demand spikes can be absorbed quickly. Prices may move, but they won't spiral uncontrollably due to scarcity alone. This also explains why XRP often reacts differently compared to low liquidity tokens that experience extreme volatility. So, how much XRP do major exchanges really hold? Blockchain data from the XRP scan supports this view. Here's what the data shows. Upbit controls 12 wallets holding 6.256 billion XRP. Binance and Binance US hold 2.5 billion XRP, and Uphold controls 1.679 billion XRP. That's a combined total of 10.435 billion XRP across just 4 exchanges, and that's only counting wallets with at least 1 million XRP each. This reinforces the idea that liquidity is still very strong, making a true supply shock unlikely in the near term. So, does XRP price depend more on Bitcoin than supply? Australian attorney and XRP community figure Bill Morgan here added another important layer to the discussion. He argues that XRP's price behavior is more closely tied to Bitcoin's movement than to supply metrics. This mirrors historical data where BTC rallies often pull the entire market upward. According to Morgan, just like past claims about Ripple's escrow controlling prices were inaccurate, the supply shock theory may also be overstated. This suggests that macro market conditions, not just XRP-specific mechanics, remain the biggest driver of price action. So, why are some still pushing the supply shock theory? Despite the data, several prominent figures continue to promote the supply shock narrative. Zach Rector, for example, believes XRP could reach $100, citing developments like Flare's FXRP project. Meanwhile, Versan Algera claims that major institutions, including JP Morgan, are quietly accumulating XRP. On top of that, the launch of XRP ETF, which have reportedly pulled in $1.14 billion in net inflows, adds fuel to the speculation. This development suggests that institutional demand is rising, even if supply isn't shrinking as much as people think. In my own honest opinion, the truth lies somewhere in the middle. The idea of an immediate supply shock seems exaggerated. The data clearly shows that XRP is still widely available and exchanges maintain deep liquidity. However, growing institutional interest, ETF inflows, and long-term adoption cannot be ignored. These factors may not cause an instant explosion, but they do create a strong foundation for sustainable growth. Instead of expecting overnight miracles, investors should focus on long-term fundamentals, market cycles, and Bitcoin's influence. XRP may not shock the market, but it could steadily surprise it. And this finally ends our video. Thank you very much for watching and see you on the next one.